SBUX will release results Thursday after the close. To prepare, we're going to take a look at where management's guidance stands relative to consensus estimates heading into the release. So to do this, we're going to be using the guidance that management provided back in October. So if you open that press release and scroll down to page 6, you'll see the new fiscal 2016 targets. And we'll also be using our SBUX earnings model, which you see on the right-hand side of your screen. If you'd like to download this model and follow along, please visit our website, gutenbergresearch.com. Click on the Free Models tab, and from there you'll be able to download the Excel file. And if you're new to our approach, you can download our document, which describes the entire approach to financial modeling and equity valuation, and this is available on our homepage. Okay, so back to management's guidance. We're going to start by taking a look at the segment details, which is right below the income statement. And you can see we break out the Americas segment from Europe and China and Asia Pacific. And below that we have the channel development and then the all other segment. So any of the cells that you see in purple, those represent management's guidance. So you can see that we have set our total store count equal to exactly what management gave us on the last earnings call. So for the Americas region, they're expecting about 700 new stores. For China and Asia Pacific, they're expecting 900 new stores. And for Europe, they're expecting 200 new stores. Now for full year consolidated revenue, they're expecting growth of 10% plus an extra 2 percentage points based on the fact that we have an additional week in the fiscal 2016 year. So you can see in our consensus-based earnings model, we get to 12.86% growth for top-line revenue year over year. So slightly ahead of what management was guiding to. And the way we get to that is we have a revenue per store estimate, which fluctuates from quarter to quarter based on seasonality. And with the new store counts, that gets us to our total revenue number. Next, we can move down to operating margin. Starting with the Americas segment, management is expecting moderate improvement year over year. So we're not really sure what exactly moderate improvement means, but we've set it at 24.6%. And when you look at last year, that would be about 40 basis points. So we have 40 basis points of operating margin expansion for the Americas segment. And if you'd like to download this model, you can plug in your own estimate here if you want to change the definition of moderate improvement and see what the impact is on earnings. Next, China Asia Pacific is expected to be flat to down slightly from prior year. So we've set it at 20.8%. And if you look at last year, that's 10 basis points below 2015. And Europe is expected to be 15%. So we've set it to 15%. And again, just like with revenue, we have some changes in seasonality for each one of these quarters, so it tends to fluctuate, but we're just trying to get to the full year 2016 results that management gave us. From there, we can scroll down to our effective tax rate, which management gave guidance to be between 34 and 35%. So you can see we've set it to the midpoint at 34.5%. And other than that, you just have a few items. So you have interest expense, which we have pretty much consistent with prior quarters, and interest income and other income. Again, you just set that similar to prior quarters. And when you do that, you get down to EPS that's in line with management's guidance of 1.87 to 1.89 cents per full fiscal year 2016. And for the first quarter, we've got 45 cents, which is the top end of the range. And that's in line with consensus estimates as well. So overall, going into this week's release, the street is in line with management's estimates. Be sure to check back after the release. We'll update this model to include management's latest guidance and see what the impact is on share valuation. And if you're interested in financial modeling, please be sure to subscribe to our channel. Thanks for watching.